What is up, YouTube, and welcome back to this new lesson about cracking correlation inside of quality theory. So, this is the fifth lesson about quality theory, and we'll go over anything surrounding cracking correlation. Obviously, I will not go too much in depth about that because it can take 5 hours, but I will talk about every principle cracking correlation I use personally in my trading. So remember, cracking correlation doesn't provide win rate, but it helps to understand whenever our sequential SMT will start to distribute, or we will have a distribution phase. So first, let's start off with what is a cracking correlation. So a cracking correlation is like a sequential SMT. It's used to confirm the function of our sequential SMT. We use them to frame entries on lower time frame or to know whenever we can confirm the manipulation that occur when we install the sequential SMT. So let's start off with PSP. To understand something, the time frame alignment of sequential SMT is exactly the same for all different type of cracking correlation. So for PSP, we have the monthly cycle being the 4-hour PSP, weekly cycle 1-hour PSP, daily cycle 15-minute PSP, 90-minute, 5-minute PSP, microcycle 1-minute PSP. So what is a PSP? A PSP, or a precision swing point, is when we form a discorrelation between the open high low close or open low high close development of a candle. They are used in a three candle pattern form only, but they aren't forced to be a swing point on all the indices, and that's what we call a PRC. So what I mean by that, we'll go in depth. Just give me a second. They can have many different utilities, either to frame reversal entries, find continuation, or form high probability rejection plays, so POI. It can be used on lower time frame to higher time frame as long that either YM, ES, or NQ have a different closure. So this is what a PSP looks like on its own. So it's pretty simple. As we can see, it's a three candle pattern, nothing really complex in that. I mean, there is nothing more. We got a bearish candle, bearish candle on NQ, and we have a bullish candle, bearish candle on ES. So this candle in the middle is a PSP because that's a swing point. So you know what is a swing point. So a high and a low forming a high or a higher high, whatever. So it's a precision swing point since on NQ it's bearish and on ES it's bullish. Pretty simple. So it can be used for different many things. First, we have to confirm reversal and firming entries. I personally don't use them as confirmation inside of my model, but it can be useful in terms of confluence to confirm the distribution sequence from our sequential SMT. It can be used to refine entry on higher time frame, but I personally don't use that. So I will not go over that in depth. So it looks pretty exactly the same. So let's say we are in the 1 minute time frame right there. So this is a 1 minute PSP. So this line right there, this gray line, is a microcycle. Let's say YM sweep this high and form microcycle at the high. This 1 minute PSP will confirm the cracking correlation to start or distribution back down to sell side liquidity. So it can be used to, like I said, firm entries or time reversal. It can be also used for continuation and high probability POIs, like I just mentioned. What I meant by that is that a PSP can be treated as a high probability order block following the time frame alignment, which can help you framing continuation when institutional order flow and structure of our power of threes are clear. I saw many videos about people saying that, let's say we have a 4-hour PSP, um, the 1 hour order block inside of it will be high probability, but that's not real. We need to follow the time frame alignment every time. So let's say on the left we have a 4-hour PSP. If we go on the 15-minute chart to our left right there, the first high and low being our swing point will be an order block. If you learn by ICT, you know that the up close candle, down close candle formation will form an order block at a swing point. will be high probability since our time frame alignment being the 4 hour is a PSP on its own. So if we look on the 4 hour chart to our left, we can see that we got the 15-minute high probability order block inside of our 4 hour PSP. So it's really the first candle that formed the order block after the PSP closure. I personally don't really use that, but sometimes it's kind of cool to reference. And now we're going to talk about SMTF. So SMTF or SMT fill divergence is a Kraken correlation we use looking only at imbalances. We have two different type of SMTF. We have the first one will be when all indices trade off buy side, I mean FVG imbalance, whatever, while other indices don't have any imbalance. And the second type will be when all indices have imbalance, but one asset or two, depend, doesn't trade into it. So you expect it to be breakaway. So I personally like to trade more the first type because you are sure when you take your entry that price doesn't need to fill it more. So this is what the type 1 will look like. So if we look, YM don't have a 15-minute imbalance, NQ have one, and oh, I put NQ on the same chart. Or whatever. That's the same thing anyway. NQ fit it, but we never have one on YM. So this making this a 15-minute SMTF. If we look at the second type, like I just mentioned, I also have NQ two times, but we don't care really about it. So we have a 15-minute BC right there and a 15-minute BC on NQ also. NQ trade into it while YM failed to do so. So this is a divergence, is a Kraken correlation that confirm that we don't need to trade on it on YM and we're just gonna keep running. I personally like when I see for example YM trade into it while on NQ we have no imbalances. And from now, I look for different type of Kraken correlation to frame my entry. And this is what my best entries look like in a continuation. As with PSP also, it can be useful. So time frame alignment, exactly the same. The only thing I really want to mention is that we don't give too much importance to SMTF that aren't hosted by any sequential SMT in our range. So let's say this one, this 15-minute BC or SMTF, if we don't have daily cycle at the external low, this 15-minute SMTF doesn't hold any value for you. You don't need to focus on until you have a sequential SMT. SD, this is my favorite one. This is what probably surrounding 99% of my entry, and we'll go over it. So what is a SD? A SD or a swing divergence are a concept we use to trade soups. So you know what is a soups in ICT concept. A swing divergence is when one asset class will take out the high or the low, depend, of a candle while other assets fail to do so. They don't give perfect confirmation, but pairs with my model, they are a great way to refine entries and confirm distribution of a CISD. So this is how to use SD. That's pretty simple on its own. It just takes a lot of experience and discretion over structure, market structure, institutional order flow, and overall power of three because many SD will fail. Many. But when you know when they work, that's when you can take advantage of that and really get super high precision entry. So we can use swing divergence as high probability soups inside of POIs. We don't use just SD to know whenever we will get a reversal, but if you learn what are our significant highs and lows being our Carter's highs and lows, so micro, 90-minute, DC, and more, and you focus on high probability POIs such as true open, like true day open or whatever, NWAG, NDOG, PSP, SMTF, you add a lot of probabilities into your trading and into your entries also. So for example, like we just talked about this SMTF on YM and NQ, you can see that it's like a three Kraken correlation combo. if you look. We have a 15-minute SMTF. NQ will trade into this SMTF while swooping the previous 15-minute low, while YM failed to do so. And at the same time, if we look on NQ, this is a down close candle, and on YM, this is an up close candle. Meaning we have a PSP SD inside of a 15-minute SMTF. This is the best entry you could have. And if you look on the 1 minute, for example, right there, from this soup, we from a 1 minute CISD, and this 1 minute CISD will blast off to buy side. So that's it for the Kraken correlation video. The only conclusion I can make there is that we have a lot of different Kraken correlation in query theory, but you need to focus on those who really resonate with you the most. There is a lot more like PRC, TPD, open close divergence, doubling theory, and more. But I will not go over them since I personally don't use them at all in my trading. I don't care about them. So I think for a YouTube video, this was actually pretty solid. I obviously will go more in depth inside of my WAP about all different type of Kraken correlation. So if you are more interested about query theory or you want to learn more about it or anything, you can go in the description. There is a free community you can join. Everything is free. I will drop this Notion, as you can see, this one, the one I just made this video about. I will drop it inside of my free community if you want it. And if you want to trade with me, I have another link right below the free community inside of my WAP if you want. That's brand new. I'll post WAP lesson and everything in the future. So I hope you guys liked it and you learned something about these Kraken correlation. And I'll see you guys in the next video. See y'all.